You want to know what the global elite are saying behind closed doors? Forget the Clarity Act drama for a second. Here's your Davos 2026 cheat sheet. The 3 quotes that prove the game has changed forever. Brian Armstrong, CEO of Coinbase, said that crypto is ready to stop being an alternative and start being an upgrade. Clear rules aren't a cage. They're the catalyst that unlocks institutional trust. Coinbase isn't fighting the system. They're trying to become the system. Jeremy Allaire, CEO of Circle, said, "We need to stop calling stablecoins crypto products and start calling them internet-native money." They are the undisputed workhorse of the 2026 global economy. While Bitcoin is the gold, stablecoins like USDC are the oil. The elite have realized they can settle billion-dollar trades in seconds rather than days. CZ Zhao, Binance co-founder, said that AI agents won't have bank accounts. They won't use credit cards. Crypto is the only currency they understand. We are building the financial system for the robots. The elites at Davos are terrified and excited that AI agents will be the biggest consumers of crypto by 2027. The bottom line, Davos 26 was the coming out party for the institutional era. They aren't debating if anymore. They're debating how fast.
While the markets are bleeding, the headlines are screaming crash, but most people are panicking. While smart money is watching and preparing for the shift, the recent Davos meeting shows that the world is changing fast towards a digital economy. In this video, we're breaking down the market meltdown. Why did the markets take a hit? Why did gold and silver just experience a historic parabolic surge, then dump? And what does this meltdown mean for our future? The real story no one is connecting is that we're moving into a new digital economy, where the digital and physical are finally merging. I'm going to show you how this volatility is actually a clearing event for the ISO 20022 standard, and why this specific moment is most bullish, a bullish signal that we've been waiting for utility assets talked about on this channel. If you want to know how to navigate this digital financial reset, let's dive in. For us to understand what's happening globally, it's best to understand what is going on with gold and silver prices, why they have surged to historic highs. It's due to a confluence of geopolitical, economic, and industrial factors, which has created a perfect storm for precious metals. Gold has acted as a primary safe haven asset for the longest time. So when we see gold and silver prices surge, that represents lack of confidence and trust in the current system, the global reserve system. The devaluation of the US dollar followed significant depreciation, which has made dollar-priced metals cheaper for foreign buyers, which boosts demand and captures the attention of governments and central banks around the world, which are buying gold at record levels to diversify reserves, hedge against volatility, and reduce reliance on the US dollar. So this massive sell-off, this bloodbath that we're currently witnessing in the markets, is a reflection of not only the end of a Bitcoin market cycle, but it's the beginning of a global financial revolution, or great reset, which has taken place before our very eyes, and it's ignited by a few different drivers. The Warsh shock. President Trump's nomination of Kevin Warsh to replace Jerome Powell as Fed chair was a large psychological trigger. Warsh is viewed as a hawk who favors higher interest rates and a smaller Fed balance sheet. This signaled the end of cheap money. Since gold, silver, and crypto don't pay interest, they become less attractive when interest rates are expected to stay high. There's also the crypto contagion. Before metals crashed, Bitcoin dropped from $88,000 to below $73,000. This triggered $1.68 billion in crypto liquidations, marking the end of a bull market. To cover these massive crypto losses, institutional desks were forced to sell their profitable positions in gold and silver. High profitable investors like Michael Burry noted that up to $1 billion in precious metals were likely liquidated just to cover crypto margin calls. The World Economic Forum's recent annual meeting created a sell the news event, and a shift in institutional focus that rattled gold, silver, and the crypto markets. There's the fact that these global players are shifting the chessboard, so to say, around the big drop that we had in this crypto market. What it actually means is a huge buying opportunity before mass adoption. So there's the normalizing of the crypto cycle, the sell the news event. Heading into 2026, many retail investors were betting on a super cycle where crypto would only go up. Industry leaders like CZ Binance and representatives from BlackRock effectively confirmed this narrative, stating that the 4-year cycle is broken due to institutional inflows. But the reality is otherwise. The reaction in the markets is when a bullish narrative becomes common knowledge. At a high-profile event like Davos, professional traders often take the opportunity to exit their positions into the hype. This liquidity exit by whales started a downward pressure just as retail was most excited. As I stated before, the primary reason central banks and governments are buying up gold is because of lack of confidence of the US dollar. The U.S. is $37 trillion in debt, but the current Donald Trump administration is planning to dump that debt into cryptocurrency or digital assets, which is a primary idea behind resetting our economy.
Trump is a man known for controversy, but what he may be planning for America's debt could be his boldest move yet. The United States owes over $37 trillion, and the supposed solution to that problem? Crypto. At least that's according to Russia. Last month, Vladimir Putin's top advisor said this.
Америка прямо сейчас пытается поменять правила на рынке золота и криптовалют.
According to him, Washington is planning a secret financial reset, weaponizing crypto and gold to erase its debt and rebuild the global system in its favor. When you first hear this, it sounds like just another Russian smear campaign on America. But when you look closer, parts of what Moscow described actually line up with real proposals being discussed inside Trump's circle. His team has talked about creating a crypto strategic reserve, a government stockpile of Bitcoin, Ethereum, and other major coins. And Trump himself, he's gone from calling crypto a scam to becoming one of the loudest champions, launching coins, promising innovation, and even hinting digital money could save America. Wild ideas, yes, but also from a man who breaks convention. This accusation isn't coming out of nowhere. It's landing just as the cracks in America's financial armor are starting to show. Confidence in the dollar is slipping. Rivals from Beijing to Delhi are building alternatives to the US-led system. And that pressure is forcing Washington to look for something new, a way to rewrite the rules before someone else does. So what exactly is Trump's ambitious plan to swap debt for crypto? Is it even real? And how would it actually work? If you'd only just heard of him this year, you'd think Donald Trump and crypto had been allies all along. He's launched his own coin, his wife's got one too, and his campaign even takes crypto donations. But that's all a recent conversion. Not long ago, Trump was calling Bitcoin a hoax, a made-up currency, and he wanted nothing to do with it. So what changed? Why would a man who dismissed crypto suddenly decide it could save America? Because something else changed first. The world has started to stop buying America's story. For almost the last century, the US could borrow endlessly because everyone trusted its money. The dollar was the world's reserve currency. Other countries needed dollars to trade, to invest, and to underpin their own currencies. And it was the financial cheat code unique to the United States. As long as the dollar ruled, the US could live beyond its means. But that advantage is beginning to slip away. Today, interest rates are exploding. Doubts are growing. And borrowing now costs more than America's entire defense budget. That quiet assumption that the world will always need more dollars no longer feels unshakable. For the first time in generations, serious voices are asking, what would happen if the world moves on from the dollar? Because if it does, everything changes. The dollar isn't just money, it's how Washington projects influence, funds wars, and sets the rules of the global game. Take that away, and America's financial dominance, the engine behind its superpower status, begins to crack. And that's where Trump steps in. Because for all the noise around his sudden crypto hype, what he's really offering is something deeper, a way to rewrite the system before the system rewrites America. And it starts with a new plan quietly taking shape in Washington. Let's break down what this actually means. Usually to deal with rising debt, you need to either spend less or pay more of it off. But Trump's crypto plan isn't about higher taxes or painful spending cuts. He's hinting at something far more radical, bringing crypto into the heart of America's financial system. He now believes that crypto should be the key to tackling the one problem no politician dares to touch: America's enormous debt. At the center of this vision is something called the Genius Act.
This is really a big day. This afternoon, we take a giant step to cement American dominance of global finance and crypto technology.
But here's where things start to get murky. Most of what we heard about this act hasn't come from Washington at all, but from Moscow. Russian state media has been blasting out stories claiming Trump wants to back digital dollars with US debt. Whether that's policy or propaganda is hard to tell, but the fact that Russia's pushing it tells you something. They want the world to see America as desperate enough to gamble everything on crypto. Still, the idea itself isn't entirely fiction. It's built on a real debate in Washington, and about how crypto could one day be tied to US government bonds or government debt. And all of it revolves around these stablecoins.
I think of the Genius Act as the first and important step for the new digital economy to take form. This allows for Donald Trump's plan to reset the system to become a reality. The Clarity Act is another important piece of the puzzle, which is currently held up, but for good reason. Brian Armstrong, the CEO of Coinbase, is right for disagreeing with the current bill structure.
Your CEO, Brian Armstrong, was with me recently, and he was not happy with what he saw in that bill, the Clarity Bill. It's hung up right now in the Senate. Are you comfortable with the changes made? Where are we on that legislation from your standpoint?
Well, we're comfortable that the White House is understands the issue, is fully engaged. We're also comfortable that not only Republicans but Democrats on the Hill understand the need for this legislation. You know, it's certainly the case, Maria, that K Street violence on occasion captures a lot of interest and attention when the lobbyists are fighting with one another. The fact of the matter is that the conversation continues to remain constructive among the principals, and we're confident we're going to see a bill get done.
Absolutely. And Brian Armstrong, when he joined me, walked us through some of the issues in a very practical way. Here's your CEO when he joined me just about a week and a half ago. Watch. I want to talk about the sticking point that you've been raising for a while now, and that is whether platforms are able or should have the ability to pay rewards on or interest on stable coins.
This stablecoin reward issue is very important, and I think President Trump has showed incredible leadership here, creating a strong crypto agenda. We just got the Genius Act passed into law, which actually did enable stablecoin rewards to happen. The banks had their own concerns, and we reached a good outcome in the Genius Act. And now the banks really are coming and trying to undermine the president's crypto agenda.
Are we going to be tapping into the Genius Act for ideas for this Clarity Act in terms of this legislation that would be suitable for you?
Well, it's very important to understand that the Genius Act is the current law. And so if for some reason we were to fall short of passing Clarity for some reason, Genius will continue. And the law under Genius is very clear. Rewards are available, and companies like Coinbase can offer them. So we actually think that what Clarity will do is extend the opportunity for crypto to a greater set. It's very important that we have new rules that go beyond just stable coins and that provide, for example, federal oversight for the first time of spot markets, that there be a clear token taxonomy so that we know what tokens fall to the jurisdiction of the SEC and what tokens fall to the jurisdiction of the CFTC and so forth. It's also very important that we protect DeFi, an important innovation within crypto as part of this legislation. So there is an opportunity with this new legislation, but let's be clear, the law as it currently stands will continue whether this new legislation is passed or not.
Well, so let's take a step back right now and see the incredible company that you and your colleagues are building here, because it really feels like you are having this ambition to make Coinbase the primary financial account of the future. You're talking about the everything exchange, expansion into prediction markets, stock trading, derivatives, 24/7 market access, traditional financial services offering, account acquisition, AI-assisted Coinbase advisor, platform expansion for businesses and developers, and, of course, the on-chain consumer economy, and even an international expansion. Am I right?
It's a long list, to be sure, but we think this is very much in line with the president's vision of making the United States the crypto capital of the world. Look, Maria, we want to be the everything exchange, as you point out. We believe this system that has underserved the American people for too long needs an update. And we think the best way to do that is to bring products and services to our customers and to the wider world that fundamentally offer consumers choice.
This is bullish for utility assets, like the ones that are talked about in this channel, XRP, XLM, and others. Regulatory clarity is coming into play, unlike other market cycles. So in the short term, a market crash like that is driven by deleveraging and macro uncertainty, especially what's going on with Davos and the de-dollarization. So, however, for utility-heavy assets like XRP, XLM, and other ISO 20022 coins that actually have utility, this crash acts as a filter, eliminating junk. Meme coins or tokens with no utility or projects with no utility often fail to recover during these regulatory shifts. This is a special time. This might be the dot-com bubble that we actually need to help clear these markets of junk. This is a precursor to regulatory certainty and mass adoption. Institutions and large banks are typically forbidden from buying unregulated or uncertain assets. As the price drops during this crash, hopefully the soon-to-be-passed Clarity Act will provide a legal green light where these institutions can accumulate these utility coins at a discount, knowing that they are compliant with U.S. law. This provides an entry point, while the Genius and Potential Clarity Act provides the institutional safety. As more institutions partner to use XRP, XLM, HBAR, XDC, Metal, and others, these new laws, these utility laws, becomes the floor price for the utility coins that didn't exist in previous cycles.